Hey fellow investors, it's Wednesday, December 16th, 2020. I'm Hoda, co-founder and CEO of StockCard, and here's a recap of today's market's noteworthy movements. Tuesday's excitement didn't continue into Wednesday. Although the Nasdaq and the S&P 500 indices finished the day in the green, the upward movement was just small. And the Dow ended the day in the red. At least one person was relatively optimistic about the market's valuations, and that person was the Fed's Chairman Jerome Powell. He rightfully argued that when the interest rate is low, the liquidity rushes to the stock market, which means the current high valuations aren't as high as many think. Right after Chairman's talk, the Fed also confirmed that the short-term interest rate would remain at zero and it will continue buying bonds until the economy gets a chance to recover. Surprisingly, the two somewhat good news didn't cheer investors. On the winners list, shares of Shopify were up by more than 7% on Wednesday. I own a few shares and I bought them last time the stock got crushed. There wasn't any news in the market today except that with every quarterly earnings report, more investors and analysts become Shopify believers and decide to jump in. Although earlier in the week, I saw a LinkedIn post by Cathie Wood from ARK Invest about how for the first time during the Black Friday Cyber Monday weekend, Shopify sales surpassed Amazon's third-party seller business. That's perhaps enough for investors to rush and buy more Shopify shares. Let's see who got crushed today. Shares of Iqiyi were down by more than 18%. This company is a streaming platform from China and it makes money by selling subscriptions and running advertisements. The stock fell after the news that it is planning to raise money by selling new shares and taking on more debt. Investors don't like dilution and stocks tend to fall whenever new shares are being issued. Although, thinking about it, there is an exception to that rule of thumb. For example, if Tesla decides to issue new shares, let's say $5 billion worth of new shares, investors don't mind. The cannabis market saw some action today as two of the most hyped cannabis stocks agreed and announced their all-share merger. Tilray and Aphria are joining forces and shaping a more prominent company. The move makes sense. Cannabis production is difficult, margins are small, and to become profitable, you need scalable operations. Merging the two operations isn't a bad move. It gives the combined company 17% shares in the Canadian market, and it seems investors like the move, gauging by the 20% jump in Tilray's stock price. That's it for today. If you like these quick market recap reports directly from my daily stock market research, please like and subscribe and share with your fellow investors. I'll see you tomorrow.